Hello, everyone. Welcome to the stock specific class here for Thursday, August the 4th. As usual, if you have any questions during the class that I don't get to, or any questions during the week, make sure you send those to jerry@traderspro.com. Well, things are getting a little bit clearer from Tuesday's class. Tuesday, when you combine Monday and Tuesday, we were kind of at an important area that we could go either way. I still talked about how I still felt like the market still felt like it still wanted to go higher. But you have to respect that as a resistance area, and some of the weakness, the buying weakness. We weren't seeing heavy selling. We were seeing kind of a exhaustion in buying at that point, but you're entering in that key resistance level. I'll review that again when we get to the chart so I can show you. For those of you that weren't here on Tuesday, you can see it. And then we got a pretty strong move yesterday that I think is giving the market the direction over the next few days. Now, I'm not going to say that with a ton of confidence, just because whenever you're in a whipsawing market, which we've been in for the last couple months, it generally isn't going to make you feel confident in any outlook that you have, and that's what creates that whipsawing condition, is uncertainty, and so the market kind of pausing a little bit today gets people wondering how strong was yesterday, and especially if we have a down day tomorrow or something, it'll really get people wondering how strong was the move on Wednesday, and do we need to be worried about moving lower? There's one of the things that's actually caused me to be a little bit more bullish is there's been still a lot of news out there that is being touted as negative news, or news that the market needs to be considering, and the reason why that's bullish is that very often in rallies you'll hear the term that markets tend to climb a wall of worry, meaning that some of the best uptrends are when there's enough healthy bad news out there that keeps people from getting overly confident. Remember, when everyone's confident, when everyone believes the market's going to go up and they know it's going to go up, that's when you're at the top. That's when things are going to reverse. So what you're trying to look for when you're in the middle stages of a rally is are there still things that are causing you to doubt, or causing people to doubt, or to question, or to wonder if the trend's going to continue. And so that's why I don't care so much about what the news is that I see. I want to see what the price action is with that news. You might see some early weakness. You might see a stock then going up, and then suddenly you're in this uptrend. Suddenly there's some bad news that comes out. You see the stock open down the next day, so it's showing that it's down. Everyone's talking about how the market's down or the stock is down, and then and it's all based on this news. This is the reason why it's down, and this is bad, and this could be something more serious or what have you. And then you see that stock surge into the close. It actually it did react to that negative news, but the second reaction, the move higher and closing near the highs of the day, is telling you that the professional traders are shaking that news off, or they're disregarding that news, or at least not prioritizing that news. So that's what you would want to look for then, is not so much the news item. News item caused the stock to open lower, but what happens next? What is the next direction? Now, if suddenly it opened lower and then you have this big drop, you've been going up pretty steadily, you have a big down day on heavier volume, closes near the lows of the day, then you know that it doesn't necessarily mean that's going to blow up the uptrend, but it could mean you're going into a correction within that uptrend, and you could be sideways or down for the next few days. And so the price action is telling you how it is interpreting that news. So that's one of the reasons why I emphasize learning how to read price action. I teach it to you in these classes. We'll look at it on some of these charts and what these candles mean, because our job is not necessarily to know what the news is. Our job is to know what the market reaction to the news is. That's what's important to us. What does the market think? Whenever there's a Fed announcement, they announce what the Fed's going to do. I just sit there, and that's the most boring part of that afternoon. I immediately want to see, okay, how's the trading going to go from there? What do the professionals view that? Because I'm not smart enough to know if a second 3/4 point hike is 75 basis point hike is good or bad. In fact, I don't think most people know if that's good or bad. They can have their opinions, but and whether I think it's good is irrelevant as well, because if the market is coming out and the way the market is trading is saying it's bad, then that's the direction I need to move in. I can't be trying to fight the current. So we're always trying to look for where the current's going and kind of trade along. So anyway, just wanted to point that out that, you're going to you'll still hear some negative things. We've got a jobs report coming out tomorrow. Is it going to be good or bad? Don't worry about trying to figure out if that's good or bad. Let's see what how the market deals with it. If the market really starts selling off in a big way, then maybe we are going to retest the lows and have a bigger drop. If it drops, but not very much, then it's probably telling you it's shaking it off, or it's trying to find a reason to shake it off. I'll show you a little bit more of that when we get to the chart. As far as the direction alerts, not much has changed from Tuesday's class. Still in a bear market. And again, why is that significant? This long-term signal does not change very often, but it's important that we recognize the conditions that we're in. We're in a downtrending market still, despite the recent rallies in the market. So when you're in that condition, you have to respect the fact that any rally could be just a rally within that downtrend. So when you're in a bear market, you're assuming that these rallies are ultimately going to lead to moves lower until they don't, until it starts to change that direction. So you start to see higher highs and higher lows, and you start to see this start to move out. Now, you can see subtly that it's starting to flatten out, the bear market line down here. If we continue to rally up, you'll start to see it move towards this middle line. And if it keeps going, and maybe I'm wrong and we're not going to get a panic sell-off this time around, maybe we break out to new highs and we start to see this move back into a bull market territory. But this is not going to change very often. But that's kind of how you can kind of look at it or use it. It's at an extreme right now. But we saw it on the way up. We had a bull market extreme where it hit levels, very high levels that we had never seen before, or at least not for many, many, many years. The momentum indicator is still in that extreme range, although again, as we pointed out on Tuesday, not to the far right side of it. There's still room for it to become more overbought. But we do need to note that we are in an overbought condition. Breadth is in the high range, getting close to extreme. It hasn't yet pushed into there yet, but I imagine if we get another day or two where we're rallying, it'll push in there pretty quick. And then sentiment has been elevated and now moving into the extreme range. Not to the far right side yet, but it's pretty high. Again, this is basically a carbon copy of what we saw on Tuesday. Buy-sell ratios are wide, but we've definitely seen them get wider before. But it is showing a little bit of an overbought condition, not extreme, but overbought. And then sentiment has reached an overbought, has gone into that extreme range, backed off a little bit, but still is elevated there. So now, I'm not too worried about this, because one of the things that I talked about on Tuesday is the feeling that if the market continues to go higher here, it's going to probably create a chase type condition. You look at you look at Apple, for instance, just to give an example. Oops. And look how far Apple has run off of these June lows. I mean, it's just taken off. And you had even a really big up day yesterday. Now, there's a lot of people that wouldn't be looking to. Well, you're in an overbought market condition, right? We're getting towards those extreme overbought conditions. Why would you go buy Apple that's already up so much in an overbought condition? There's resistance to do that. Okay, you want to wait for the pullback and wait for or a consolidation. You're usually programmed to do that, but the markets are just possibly starting to break out, which means that let me go back. Let's go ahead and pull up our index charts here. This is a critical signal right here, this June high, and we're right up there. We're getting ready to break out of that. Well, if we break out of that, this thing could start taking off, and I would assume that Apple would take off with it. And so again, these fund managers, they got to show that they're holding Apple. Apple's had a remarkable year so far. It's outperformed all these other stocks. They got to go buy it at the highs. They got to go buy it as far as it's already moved because they've got to show it in their portfolios at the end of the year. And again, I talked a little bit about this on Tuesday, but it's worth reiterating here. These fund managers have to show a return. They've had a terrible year. They've been beaten up. Almost everything they started to get into is dropped, particularly these fund managers that can't short the market. They have to always be long. Well, there hasn't even the only thing that's been long that's worked from a long standpoint was the oil trade and oil stocks, and that was pretty much it. I mean, there was a few transportation stocks that worked a while back, not recently, but they've been beaten up. There's been nowhere to go. Can't go to the bond market. It's been declining. And so there's a lot of pressure for these fund managers to show something, and I can feel it out there. I can sense it, and I just know that if we start to break out of this area right here, there's going to be a chase. They're going to start chasing these things, and we're going to get that grind higher, and we're going to have to get used to some of these overbought conditions for a little while, and it's going to be difficult because I hate buying into overbought conditions. I love to look for pullbacks or get in on pullbacks. The problem is I don't think that we're going to get many pullbacks if we break out here and start to run. And but it also means we got to be really aware of recognizing bearish reversal signals, because if that at the point where that starts to exhaust, I think that's where we're in danger of getting that bigger sell-off and that panic sell-off. And all I'm hoping for is that the market gives us a clue beforehand, gives us those candlestick formations, gives us a signal that we're getting near a top. Usually it does. In most cases, we've been able to avoid the start of these big drops, or at least been able to reduce the risk exposure to it. But I just never assume that anything's guaranteed in the markets, and so there could be. If there's one way to get me to be a panic seller as well, it's to not give me any kind of signal of buying exhaustion or bearish reversal, and then just drop, and that'll cause me to start panicking because I didn't get the signal ahead of time that I'm used to seeing. So anyway, that now. Again, you can look at this and say, well, Jerry, we still haven't broken above that. What switched you from being more cautious on Tuesday to being more bullish now? Well, you can see, obviously on Monday, I was worried because we had just a buying exhaustion candle. We gapped down. We tried to rally back up to a new high right here, a new recent high, and then we faded into the close, and we faded inside this candle. Now, if it would have faded inside the candle and been an opposite day, if this would have been an up day right here, and this smaller one would have been a down day, meaning it would have opened higher and closed lower, that's what we call a bearish inside day. That would have been a really strong, well, not really, really strong, but a much stronger bearish reversal signal, okay? I would have really turned a lot more bullish or bearish at that point. But it was an inside day, but it was in the same direction. So when you see that, that's a reflection of buying exhaustion. That means that there's not a ton of people selling that's driving that price down or reversing that price action, but there aren't a lot of buyers. There aren't enough buyers to push it to a new high. Now, this happens all the time. So by itself, it doesn't mean a whole lot, and it can be very temporary. But when I see that, and I see this critical resistance area that everyone's focused, we're not the only ones focused on this. When anyone that knows how to read a chart is really laser focused on this area right here, and it goes back even further. It goes back to this area right here where we reversed it. There's a big reversal candle in this lower part of the area here. This whole block is really significant. So when I see buying exhaustion in this area here, that concerns me. That causes me. Now again, it didn't cause me to be bearish, but it caused me to want to go to the sidelines. Kind of that when in doubt, get out type of mentality, where I wanted to kind of I wanted to reduce risk and kind of see what would happen next. Followed up with another weak candle yesterday. Tried to rally again. Couldn't rally, came all the way back down. Again, the selling wasn't, outrageous. We did see the VIX move up a little bit on these 2 days. So there's definitely some fund managers that were looking to buy some protective puts, just in case it started to fall apart right there. But then yesterday we surged higher. Now, if you're just looking at the S&P chart, that you could easily just say, well, Jerry, we still haven't broken out. Why did you turn a lot more bullish on yesterday's candle when we're still below this area? And it has to do with the other index I told you to keep an eye on Tuesday, which is the NASDAQ 100. The chip stocks, technology, tends to be a leading indicator. Usually the market isn't rallying strongly if technology isn't rallying with it. At least that's the way it's been for the last 20 years. Okay. So if you draw a line across that June high that we've been looking at right here, we barely actually moved above it here on Friday, but then here we have the two, Monday and Tuesday, where we stalled out a little bit, like everything else. But look what happened on Wednesday. Yesterday had this big clear breakout, opened at the lows of the day, closed at the highs of the day, clearly breaking above that June high. Okay, so now again, this, you can look at everything different ways, but like I said, knowing that technology tends to be a leadership stock or group, it's breaking out. I would assume the other indexes are going to follow then at that point. May not follow immediately, but that was a pretty bullish sign, particularly after it shook off what looked like, a little bit of weakness that was forming right here. Okay. Now, today it's been a little bit of a mixed market. NASDAQ is up again. S&P is flat. Dow is down a little bit if we look at the Dow chart. Now, this doesn't concern me too much because, okay, here's the Dow chart. Here's those January highs. This is telling me that maybe there's just a little bit of a pause here before it breaks out. A lot of times at these breakout areas, when a stock gets up to the breakout, this previous breakout area, sometimes it can pull up to it, it can pull back from it, and then break out. Sometimes it can just move sideways along it and then break out. Sometimes it breaks out. This could be what happens with the NASDAQ. Broke out, and then maybe it pulls back to it for a couple of days to retest it and then takes off. So again, we could see a little bit of sideways movement for a few days in this area. But the fact that we rebounded pretty nicely yesterday, and by the way, the Dow had a pretty bearish looking candle on Tuesday that it reversed. And that was another thing too I was noticing, is that was a pretty bearish candle, but it reversed it yesterday. Didn't really break out with it, but it reversed it. This looks like it's just kind of pausing. Whenever you see a stock moving sideways, you want to pay attention to the direction it was moving in before it moved sideways. That's where it's more likely to go after it's done moving sideways. And, you know, I don't know, you could get into physics of it or have what have you. If an object in motion is likely to stay in motion, or I can't remember what all those rules are. It's been a while since I've been in college. But now, again, you could say, well, Jerry, you're highlighting this area, and that's an area where it didn't work. You had to move up, it moved sideways. At the time, you were talking about it breaking out higher there, and it didn't. We had this big drop. Well, let's not ignore this right here, okay? Is it still possible that the same thing happens, where it moves sideways, we're expecting it to go, and then it has a big drop? I'm not gonna say it can't do that. But let's say, okay, what would be a signal then that could be underway? What would I have to look out for to really warn me that could be taking place? Well, on this particular chart, maybe we ought to go to the S&P chart, because that's really the main one we kind of focus on or look at. You know, I would look at probably this area right into here. You know, we've been reaching higher highs and higher lows. There was a higher low right there, higher high right here. You've got, remember, this was a key area we were focused on with that gap down that took place right here. There's a lot of congestion in this area right here as well. This is another solid area right in here that we got to pay attention to. Let's be aware of that. If we suddenly sell off and it comes down into this 400 level right here and holds, goes back up, then no big deal. That sell-off is not that big a deal. It's probably just a pullback. We had a big run-up right here. Market got a little bit overbought. If we start to break into this zone, we become concerned. And if we were to break below this zone, we really have to rethink what's going on. Now, the problem is when stocks start to fall, they fall a lot faster than they rise. So I would imagine that it would cut through this very, very quickly. I mean, it cut through this range within 3 days. We had broken down below that range, 3 or 4 days, and then a couple days later it was done. So all this could happen very, very quickly. But as long as we're just kind of moving sideways, we're having down days, but not big down days, and then the up days, you know, as long as we're kind of moving a little bit sideways here, we're going to assume that things are going to continue in that direction, because that's what happens the majority of the time. This was a very low probability move. So you have a choice to make. You can now focus on that, and that you were so mad at being wrong there that's your obsession now. Anytime you see that pattern again, you're going to assume it's not going to work, or you can say that was the low probability outcome, bad luck, and I'm going to still focus on the higher probability move that happens when that formation takes place. Most of the time, you're going to get a continuation in that trend direction, and that's what I'm going to expect. So the NASDAQ breaking out, I thought that was key. Now, along with it, the VIX made a pretty decent move down. We'll take a look at the VIX here in a second. Probably need to move the VIX up on that I think I'm going to do that because so often I'm tying the VIX with the indexes, and I had the VIX down the lower part of that list, and I need to move it right back up to just below the indexes. I'll do that this next week, so we don't have to go all the way down the list. But now again, don't panic if we get a couple days where we come back to this area here and pause. I mean, another thing to consider is that we're in the extreme reversal risk area here on the Qs. Now I think we're that on in that on the SPYs as well, but we could get all the way to the far right side of that and still be okay, and we could stay to the right side of it for a while. So, but I also don't want to ignore that we're in an overbought condition. We could move sideways or pull back at any moment. S&P chart has just barely entered the extreme reversal risk range. What does the Russell look like? Just barely you're entering that reversal risk range. Russell's down slightly today. And again, it's right at its area right there. So again, I go back to logic here. Either the NASDAQ, which is typically the leadership index when it's in a bull market and when things are rallying, it tends to be, and Russell 2000 is one too, and probably more so than the NASDAQ. When traders are really confident the markets are going to go higher, they tend to go into those small cap stocks because that's where they're going to get a bigger return. But the only one that's broken out is the NASDAQ 100. So you could say, okay, the NASDAQ 100, that's a false breakout. All these other ones are going to stall right here and drop. Yeah, that could be possible. Or again, you could look at it as NASDAQ 100 tends to be leadership. It's broken out. I'm assuming the rest of these are going to break out as well. And I would assume by the time we have classes next week, some point next week, we're going to see a couple more of these indexes break out. Really, I would expect the Russell being right here. It's bumped up right against it. Maybe the Dow will lag a little bit still, possibly, and it's a little bit further away. S&P is right at it. Let's see, the Dow's a little bit further away. Maybe it is into next week that it breaks out. If it does, S&P is pretty much right there. So if we can see a couple more of these indexes break out, that's confirming that market direction. And I think at that point, the traders are going to become, like I said, everyone's focused on this. So traders are going to become more confident in buying. But you can see the problem, though. You can see how far we've already moved up. You can see up here that we're already overbought. And you start to see how it could start to create this chase or this, this panic buying is what I call it. I know it's a weird term, but it's the best term to explain it. I've seen it happen so many times. It's like they're panic buying right now. They're not making detailed decisions on where they think that stock could go and what the fundamentals are and when do they think that stock could run up to before it becomes expensive and they need to get out. No, they're like, I got to get into Apple. It's taken off. I need to show it my portfolio. Let's get in. And they're doing that panic buying. Hold on just a second here. All right, so that's why I think this is just setting up for that. It just really looks like it's lining up to do that. Let's go down and look at the VIX real quick and then go through these other charts as well. And this isn't the best representation of the VIX because it's the ETF that that incorporates the VIX. It doesn't move the same way as the VIX indicator, but it's the only one that will pull up on the software, because all the stuff in this software has to be something that's traded. It has to be an instrument that's traded. This is how people can trade the VIX if they want to trade it like a stock. I don't recommend doing that. It's you just have to do some study into how, because the VIX is a derivative of a derivative, and it really gets complex as to how that can move. I don't put it this way. I don't put a lot of weight on chart patterns on the VIX or other things that I would normally look at. A moving average or something. Is it going above a 50-day moving average or below a 50-day moving average? It's not a true stock. The best way I could describe it is imagine if you could place a bet on a football game between the Raiders and the Cowboys. That is a derivative type of trade. You're buying something that's based off of an outcome of another outcome, an outcome in this case of a game. What if you could then buy that you could gamble on the person that's gambling on the Cowboy Raider game? You see how that starts to get maybe that's not the best example. The better example is an option. If you know how options work, if you could buy an option on Apple, if you thought Apple was going to go up, and you could buy a call option on Apple. Well, that call option is the derivative. Its value is derived by Apple stock going higher or lower. It could be down. What if you could buy a call option on that guy's call option? So your value on this trade is derived from the value of this option, which is derived by the value of Apple going up or down. You see how complex that starts to get? And you can get really weird movements. You don't get normal. You can't. It's hard to understand where the value is in that. How is it valued? There's a lot of perceived value that could disappear, and you're like, how'd that go from being worth $5 to nothing? And nothing happened in the market, really. Nothing happened on the stock or anything. There are these weird moves that can take place with these types of trading instruments, and I don't recommend them, but the VIX indicator itself is helpful to us, because if you understand what it is calculating, it's looking at and I've got a trading on this. If you want to go to YouTube and go to the Traders Pro page and look for the VIX indicator. I have a whole class where I explain how you read the VIX indicator, what the VIX indicator is telling us. But we use it to gauge the confidence or fear of the big institutional traders. How are they feeling? Are they feeling scared? Are they feeling confident? And we use that along with the charts and what we're looking at on the charts. So the reason why, these 2 days here, Monday and Tuesday, it wasn't a big spike up in the VIX, but it was showing a little bit of concern. So we're seeing this market pull back a little bit at a resistance area, and the VIX is showing us a little bit of concern. But yesterday we had a big drop in the VIX. It came way down. So it's telling me on that big move up now remember, you're always trying to compare the VIX with the S&P 500. We're not comparing the VIX to the NASDAQ 100, but in this case, the NASDAQ 100 was breaking out. It's the leadership index in this case, and the VIX is making a significant move down. That's giving me a little more confidence that breakout is legit, and that it's more likely to continue. But this is something we have to watch. Do we have a day where the market pulls back a little bit? It doesn't seem to pull back that much, but you see a big spike in the VIX. Maybe that could be something to be concerned about. Or if you see a big down day right in this key area and a big spike in the VIX, that was something to be worried about. But like I said, I'll probably have it. It'll probably happen. If it ever happened, it'd probably be near a class that I'd be giving, and I could give you my opinion on what's going on there. All right, bonds. Now we talked about bonds. I don't want to spend too much time on this. This is the critical area here on bonds. So we did break above that on Monday. We came back below it on Tuesday. Wednesday, we came back to it again. We're kind of just hovering along this line right here. Again, the toughest part here is it does look like it could be reversing back into an uptrend. And if it can give you a higher high right here, you've had some higher lows through this rally. But the tough part is that this looks really choppy. Usually on those trend reversals, impulsive, corrective, impulsive, corrective. You like to see impulsive down, impulsive up, and then corrective. Kind of that inverse head and shoulders pattern, upside down head and shoulders pattern. And instead, we're getting this impulsive, corrective, impulsive, corrective, impulsive. And this is looking kind of corrective, but it is going to a higher high, so you have to respect that. But this is not looking like a strong, confident move. Now, that could change. If we were to break out here and you get a couple of days where it moves sharply up, then I would say we're in a trend reversal on bonds at that point. And maybe that's what it's waiting for, just like the rest of the market. And this is a spot that all bond traders are focusing on. Can we break above this? That was the last lower high previous to the lower low we hit right here. We can break above that. It could show that we're kind of forming a bottoming process here. Gold has moved up pretty sharply. We had a big update today. This is starting to look like this is kind of looking like an impulsive move up. So there might be a little bit of a trend reversal here in gold. I don't know how long that'll last. And gold's been pretty erratic, so I haven't really looked to be trading it. Oil had another down move. In fact, I stopped out of my USO trade on the portfolio. Again, I was looking at this as the pullback, had this nice move up, pulled back from that, went higher, higher low, higher high, and then bam, we came down. Well, we came down here and it seemed to hold, so I didn't stop out that day. Was looking to see if it could regain momentum, but then yesterday it clearly broke below that. That's where I had my stop, got out. Now it looks like it could continue to test these lows and move down a little bit lower there. So I'm going to probably stay away from the oil trade for a little bit. The dollar looked kind of like a textbook bullish ABC pattern here on Tuesday. It looked like wave A, wave B, wave C. We had the start of a move up right here, right off of this support area right here. And then today's a pretty decent down move right there. So we're going to watch this area to see if it holds the support. You can have these bounces back and forth and consolidations and things like that. But we're going to watch this. We break below that, especially if we have a sharp drop below that, then it could be that we're in a downtrend. This could be the first move down. Here's the correction, another move down. Or it ends up being a much bigger ABC pattern and then takes off. But today's move is definitely showing a lot more weakness in the dollar. The way it it did show a little bit of that buying exhaustion yesterday. It came off well off the highs of the day there. That wasn't a very strong close. So not shocking that it was down today. But from me being a lot more bullish on Tuesday, I'm a lot more bearish on it near term, at least based on the price action today on the dollar. That type of a day right there, you should at least have another down day with that. But maybe you have a down day that forms a bullish reversal in the price action. That's something you could look for as well. We looked at the VIX, chip stocks again. I felt like chip stocks broke the downtrend right here. This was clearly a lower high, lower low. And this was the lower high prior to that lower low. This is why I think remember, it was right when we did this that I started to feel like the market was going to rally, more likely to rally. Now, I needed to see more signals to give me more confidence of that. And you'll notice that each day we had more and more signals pointing towards that. I did get a little bit shaky right here when it pulled back, and then also when the market earlier this week started to pull back a little bit. But now again, you could make the argument though. You say, well, Jerry, we broke above this high, but that's still not the June high, and we're looking at the June high on everything else. Well, the difference is if you look at the S&P chart, remember the reason why we're focused on this is the previous lower high after the lower low, or before the lower low. So here's the lower low, here's the previous higher low. Now, when we rallied off of this in here, we never went to a lower low. So it's not like this was a lower high right here, and then we went to a lower low. The chip stocks right through here went to a lower low, which means that area became the key one to show a potential trend reversal. And again, we're not going to base our entire analysis on one thing like this, but it's one clue. Again, that's what we're looking for. Little clues, or can we see these little subtle clues of a trend reversal? Knowing that chip stocks are a leadership group, here is why I turned very bearish, is they were leading the way down. The market didn't go to a lower low, but these were going to these went to a lower low right through there. These broke lower, get lower high, right? So this is the previous lower high before that lower low. And so I thought when we broke above that, that was something to pay attention to, and it's looking to kind of confirm that. Now, would it confirm it even more if it can break above the June highs as well? Absolutely. Dow transports have broken above that June high. So the Dow Industrials haven't done it yet, but the transportation stocks, remember, transportation stocks tend to be a leading indicator of the Dow Industrials. They tend to, when you see them break out or down, sometimes we look at leadership as always being positive. Sometimes these will go lower when the Dow is going higher, and you're like, okay, I don't trust that Dow Industrial rally because the transports are peeling off. They're going down. That's something that you got to pay attention to. That could be a warning that not to trust the rally. Well, in this case, we're breaking out of the significant high before the Dow Industrials are. I think that's a bullish clue. And Bitcoin, we're still kind of in this flat area. Hard to tell what it's doing right now. Like I said, though, if it can hold, it had an even low right here. Looks like a higher low right here. As long as it doesn't dip below this low and starts to rally, it could give you another higher low. If you break out above here, give you another higher high. That would maybe cause me to be a little bit more bullish on Bitcoin. But right now, I wouldn't touch it because I don't know the trend direction. It's just sideways, and it could go either way. If it breaks below here, it could have another leg down. So I know some of you have cryptocurrency, so I apologize. I didn't mean to ruin your day there, but I didn't ruin it because I didn't say it couldn't go up. I just said it could go either way right here. We don't want to assume a direction. You wouldn't want to be adding to your Bitcoin portfolio right now because it's not showing you a clear direction yet, and that clear direction could be to the downside. So you wouldn't want to add anything at this point. All right. Let's get into individual stocks. First of all, on the portfolio, I did end up getting out of USO and Lilly. Let's take a look at those. USO. Well, USO I already showed you. Let's look at LLY. I wasn't too concerned when we were, because our stop was down below here. We had this down day on Tuesday. I'm like, well, we're still okay. It could bounce. It could find support along this range and go up. Nope. The next day we broke below that range. I went ahead and got out. Now, technically, this was the previous low down here, higher low. So could this rally up and still give me a higher low? Yeah, but this would have to break out for me to probably want to get back in this thing again. So I went ahead and stopped out of that one. I'm still in the SPY. Let's show you what I'm still in. RTX. It's kind of been flat the last couple of days there. I'm still pretty bullish on the sector. And then the SPYs, our market index should continue to keep going here. Going to see if we can ride this trend up a little bit, the SPY. And let's see if we can maybe add a few things. I feel a lot better about adding today with the way that the market looks like it's breaking out. Now, one area we can go to, let's go to a muscle stocks tab right here, and let's look at the new buys. That's a real quick and easy way to find stocks. Just because they're in the new buy and they're getting a new buy signal doesn't mean we're going to buy them, and just because they have a high strength rank doesn't mean we're going to buy them. I usually like the chart. Bellis Healthcare or Health BLU right here has a 99 strength rank. Excuse me. It switches the signals here. Now it does look like you've broken out. You broke out above this range right here. You came back to it. So it used to be resistance, became the floor, became support. It looks like you're rallying off of that again. You're getting buy signals again. Thing could start working its way higher, go to a higher high. Looks like it's trending in the right direction. One thing you have to be aware of, though, is much like the rest of the market, though, and so the whole market, you're going to see a lot of these patterns because the whole market is forming this pattern. You've been rising, but it's been kind of choppy right here. You'd like to see this be more of a choppy pullback, and then this being more definitive, more sharp, more impulsive looking. Instead, you have a little bit of a blip right here, but it's a pretty sharp drop, and then this is more corrective looking. So the danger is that maybe this is still part of a larger correction. That's wave A, it's completing wave B, and you're about to get wave C, maybe down into this area here, or maybe down to this support area here, and then it takes off. So just be aware of that. Now, you can still manage this and manage that risk. I would just put a stop right below here. Because if this is wave A and that's wave B, and it starts to go down wave C would have to go, well, typically would go below the end of wave A. So it'd go below that low. And that's where I'd really know I was wrong, is if it dipped below that low there. You could even have a tighter stop where you're like, well, you've got these little lower high, lower lows. What if I don't want to take a big risk on this. I'm going to buy this buy signal, and I'm going to put a stop right below this low right here, so I don't risk very much. And that's not a bad one there, because if we were to drop below that, even though we haven't gone below this low yet, I would feel like there's a really good chance that you're in a C leg or maybe even a downtrend. This could be the start of a bigger downtrend at that point. But that would be a place where I'd know I was probably wrong if it went to that lower low right there. So now, but some of those tighter stops, it could barely stop you out and then take off in a big way. And there's always the pros and cons of managing trades. There's no perfect way to manage a trade. Just always realize with tighter stops, yes, there's less risk, but it also increases the chance that you'll get stopped out a lot. You better get used to being stopped out a lot, because going to happen. If you want to give it a little bit more room to bounce around, then you can put a stop down below here. But that's a pattern that looks pretty good. I like that one. Another one on the new buy list is this ACET 98 strength rank, and I really like this one because you come down, you're now moving higher again. Again, notice right in through here you had a higher low, and then you broke out to a higher high. Now you've gone all the way up to here. Now you've got impulsive, and this is definitely corrected. This looks like your ABC pattern here, maybe wave A, wave B, wave C. I don't get too caught up with labeling exactly wave A, wave B, wave C. That's why I say focus on the behavior. It's more choppy, more sideways. Whenever you see a stock moving sideways, you want to pay attention to the direction it was moving in before it moved sideways. That's where it's more likely to go after it's done moving sideways. Like I said, it just went to a buy signal today. I could put a stop down below this range right here. And then this is going to be a target. Doesn't mean that has to be where you exit the trade, but it should. If this is a trend that's continuing and the market continues to move higher, the stock should work its way up to that previous high. It's not unrealistic to expect it to get up there. And again, it could break out and go even higher. That's always a possibility as well. I like this one. I'm going to go ahead and put this one in the portfolio. So I want to know what these lows are that day. So what I'm going to do is I'm going to put my mouse over this day right here, and then I want to look over here at what the low of the day was that day. 1577. What was it on this day right here? 1563. So I'll just say 1550, just to give me a round number that's close. Let's add to the portfolio. Stop price at 1550. I did 100 shares. What would that be? Oh, that's way low. 1,000 shares would be too high. So let's do 500 shares. Let's check this here. So if I did 500 shares, I'd be committing almost $9,000 into the trade. That's not what I'm going to lose or thinking to lose. If I stop out at my stop loss price or very close to it, I'd be risking about 1.13% of my total portfolio. I want to keep that below 1. I like it around 1 to 1.5. So as long as it's below 1.5, which it is, I'm good. This is important. The dollar amount, if I got stopped out in this transaction, would be $1,300, almost $1,400. You better focus on that and make sure you're okay with that, because we are going to get stopped out of trades, and that's what your loss could be. It could be even a little bit more than that if it gapped lower than your stop. Okay. Now, if that amount is too high and that's my mortgage payment, I can't do this. Okay, then you need to reduce those shares. You can still do the trade, but cut those shares down to 100 shares or something. Get that risk amount down to what you can handle. Okay. And it's okay. Every trader has to do that. They have to find where their risk tolerance is. Now, the good news is you can raise your risk tolerance over time. Usually it comes with results. As you start to see results, you get consistent results. You know that one losing trade is not the end of the world. And in fact, it usually means you're closer to having a winning trade. You can bump that up to where $1,300 is no big deal anymore, and like I don't mind losing $1,300 because my last trade I made $5,000, and I know that if I just keep following my system, those types of results can happen, and it gives you confidence to kind of to be able to raise that risk amount. Now, you want to be careful. There is a point where it becomes gambling, where you raise it to where the probabilities just aren't going to, allow you to succeed over time. You might have a chance to double your money on every trade, but you could also wipe out your account in 2 or 3 losing trades or something like that. That's where the risk is low. I don't care what your risk tolerance is. The risk level would be too high at that point. You got to change it. All right, I'm going to go ahead and purchase this. Another one in the new buys I liked was this FHTX, Foghorn Therapeutics. And mostly just it's kind of a choppy, but it's been trending up, kind of coming out of a little bit of consolidation right here. Could be breaking out. Now, you do have a high right up here that's very close. Danger on this one is it could be a lot of sideways movements. It's shown a lot of sideways movements lately. But, if you think the market is going to start to become more decisive, this could go on a run. It's gone on a run back here in March, where it really took off. I'm not going to do a trade on this one, but this is one that it's not terrible, not a terrible pattern there. And then the CRT, I can find it. Now it's down today, and so note that you'd want to see it come back. It went back to a hold, in fact, but you'd probably want this to go back to a buy signal. But what jumped out at me is it looks like it's forming potentially an inverse head and shoulders pattern, one of the best bullish patterns to trade. And the nice thing about this is if it can find some support, a lot of times the left shoulder and the right shoulder end in about the same spot. So I wouldn't be surprised if this drops another day or two. But if it starts to come back, and it looks like if it does look like it's starting to come back, you can find an entry somewhere in here. And if it breaks out, if it gets up to this breakout area right here and breaks out, the rule of thumb on an inverse head and shoulders pattern is you can take the depth of the top of the head or in this case, the bottom of the head to the neck up here and project that distance upward. And that gives you kind of a minimum expectation. If this breaks out, very often you'll see it get to that area. Now, again, it's a rule of thumb, not a law. Doesn't mean it has to or it's guaranteed to do that. But I'm telling you, these things don't become rule of laws. You don't hear technical traders talking about them a lot if they didn't happen a lot. You didn't see these happen a lot. So they're good little target things you can imply or that you can apply to your trading. And what I love about these, I may not look to hold this thing all the way to an area like that, but now I kind of have a destination, at least something I can focus on of where I think it could get to, and that might help me avoid getting bounced out in this as it's going up right here. What gets us bounced out a lot of times in trades that. Have you ever gotten bounced out of a trade and it really took off and you missed the biggest part of the move and you're like, man, why did I get bounced out of this thing? Well, a lot of times you get bounced out because you don't know where you expect it to go. And so you're making money. You don't want to give back the money you're making, but stocks aren't going to go straight up to where you're making money every day. They're going to throw you a little bit of a hiccup to try to spook you out of your trade. And if they're throwing you a little hiccup right here, but you think, man, there's a great chance it's going to get up to this area up here, then you're less likely to get spooked out of a little of those whipsaws that could get you out and more likely to be able to hold it for that bigger gain. And maybe you don't hold it for all the way to this big gain. Maybe you get up close to it and you're like, yeah, that's close enough. It's starting to show a reversal. Let's go ahead and get out and take our profits on that and be good with it or something like that. So anyway, just something I'd like to point out there. Let's get into our sectors here. And I'm going to go into computer and technology. And I'm going to go into the buy category right here. A lot of times I look for holds because I'm looking for the confirmation I'm looking for is to go from hold to buy. But but I've been checking some of these buy sections right here to see if any of these stocks that have buy signals have shown just a pullback or a correction lately that I could jump into or have confidence maybe jumping into. I like this GoGo Incorporated 97 strength rank. And what I like about this, you have to kind of back out to a bigger context here, is it looks like it, here it's been trending up, but it looks like here it broke out, and this looks like a larger bullish ABC pattern. And I don't know if it is or not. If it ultimately is or not, I can't know that for sure right now. But I also know that I can, if I got in right here, I could put my stop down below here. And if I'm wrong, if it comes back down here, it's probably not a bullish ABC pattern. I get stopped out. If it does keep going higher, this thing could have a pretty good run there. And I'm looking for more of these types because we've had a bigger pullback in the market. The market's starting to look a little bit more bullish now. Keep in mind, I'm going to keep reminding you of this. Although I'm turning a lot more bullish in the near term, I still expect a panic sell-off at some point. And I think that this market right now is going to rally to suck a lot of people in. We're going to take advantage of that. We're going to benefit from that, try to make some money from it. But I don't believe that the bear market is over. I don't believe we bottomed yet. And so we're still going to be on our toes a little bit, looking for any sort of bearish reversal signal that we need to get out of or go to the sidelines, or maybe use our inverse ETFs to take advantage of a market sell-off. I think we still need to be a little bit cautious about that. So just keep that in mind, even with these trades I'm getting into. I'm not saying that these are going to go up forever. I also like in computer and technology, going down the list a little bit, strength rank list a little bit, NVIDIA. I've been wanting to get into chip stocks, some chip stocks, because if we're going to rally here, the chip stocks are likely to kind of lead the way. And so I want to get a position in NVIDIA. I know it's an 84 strength rank, but I just like, it looks like it's kind of showing a possible bottoming process right here, maybe starting to work its way up the right side. And if it can break out above here, we can wait for the breakout. I'm going to go ahead and get in today, but we could wait for the breakout as confirmation that now you've gone to a higher high right there. But I want to have some chip stock exposure, and I think NVIDIA and AMD are like the best chip stocks out there right now, and so I'd want to own the best of the sector, best of the group. Now I need to place a stop. I'm going to put my stop right just below this low right here. Let's see what that is. Low is 164.78, so just 164. Oops, not the watch list over there. It's the portfolio here. Stop price at 164. 50 shares would be about 9,500. Portfolio at risk 1.14%, so we're good there. All right, let's go ahead and get into that. And then I looked quickly here. I looked at a couple in the medical sector. One was this, I can find it here. MCT, I think we've looked at this one before, 94 strength rank. It dipped a little bit yesterday, but it's right. It's starting to break out of this area right here, and it's back above the breakout. And again, if you take this long sideways kind of consolidation, when it breaks out of these ranges like this, it tends to go up about the same distance as the range. I also like VIVO. Meridian Bioscience, VIVO. And again, you can see nice uptrend. It's just kind of chopped a little bit sideways through here. You could wait for it to go back to a buy signal as confirmation. It could break out, but and I really wouldn't want to go sideways too much longer. If you're in this thing and 2 weeks later it's still moving sideways, this is about the limit of the indecision that I'd like to see. This thing should start to get going here, and maybe it's just waiting for the market to break out. And then the last one, I think I went over this one Tuesday, or I've recently gone over this one in the medical group here. This oh wait, it's under the buy section. Hold on. It was under the new buys that I think I did on Tuesday. The LQDA, Liquidia Corp, 98 strength rank. I still like this one. That looks like it's possibly bottoming out right here. Nice impulsive move up, corrective to a higher high, has a higher low. All right, that's all I have. So portfolio, I added 2 today. We'll see how that works for us and go from there. All right, have a great week, everyone. We'll see you on Tuesday for the next market update. Bye, everyone.